What's going on, traders? In this video I'm going to talk about how to identify the market behavior, and I have prepared for you my live trading session in the second part of the video. And I know some of you guys are here only for the live trading, so before you leave, guys, do me a favor, like the video, and I'm going to see you guys in the next one. But for those of you who want to stay, today started with the trading range looking structure, and this is a healthy trading range because healthy trading range goes from the lows to the highs, and from the highs to the lows, and from the lows to the highs once again, and it goes like this forever. This is a healthy trading range. We have a breakout out of this trading range structure in the bullish trend. We have a double bottom right here, failed second entry short, price is moving above the EMA, reversal pattern, and we're continuing higher. Now we have a breakout right here, but we don't take or trade this breakout at all because, as we all know, most breakouts of trading ranges will fail. So if anything, if we want to trade this breakout at all we want to do is fade this breakout. This trend was fairly strong as I was looking at this live, so I wasn't really focusing on fading the breakout at this point on. Market then went into this downtrend, and here was my first trade where I had a losing trade today. I started with a losing trade today, and I'm going to explain you guys why. As we broke this trading range structure and prices will continue working higher bullish, this was looking like a very strong trend. And just as I knew initially, most breakouts of trading ranges will fail, prices came back and came to this key level and retested it. The key level that acted as a resistance now acts as a support. And I was looking for a bounce here and continuation to make a new high of this uptrend, because after break of a trend line, prices will attempt to make a new extreme. I got trapped here, probably should have paid more attention to this downtrend, and I went long directly into the EMA, into the moving average. But I still think in the hindsight the odds were in my favor that we may get a bounce from here. Take a look, we continue working lower, we broke this key level and prices continue working lower. Now we only made it to the top third of the trading range and then bounced from here. And here is the thing that I mentioned in one of my latest videos, which I think it's named like how to recognize which breakout is going to fail and which will succeed. We only made it to the half or to the upper third of the trading range and then pushed above and broke the trading range. But we don't want to fade this trading range now at all. This one was okay to fade, as you guys can see the fade would work, but right now we are not interested in fading because this right here gave us enough information that sellers are, they're not strong enough to pull the market down to this support, because in a healthy trading range you're supposed to go down here. This is what should have happened from here to down here. But there was a lot of people started buying at this point on, and we pushed above the EMA, and the key level is now holding as a support. Basically what I was looking right here happened right here, and prices burst up and rolled up higher here. From this point on, you have to switch gears. You have to forget about this downtrend, because take a look. This high is higher than these highs. This low is higher than these lows, and this high is higher than these highs. So what I did, I found a trend line, something like this. I didn't quite have it tight like this nicely, but I have a very similar trend line. And as we are working above the EMA, and a lot of people started buying at this point on, we are only focusing on buying the market. This is now going in an uptrend, and we're only going to be looking for prices to go to this key entry point, to this trend line, or to the EMA. We preferably want to get to this key entry point, this trend line, but price market may be so strong that we may only get to the EMA. So with my first loser today, I'm watching this market to go higher, and as this market were continuing to go higher, as you guys will see, what I did, I looked at this trading range and I found the measured move of this trading range, kind of get the idea where the most likely the highs are going to be, and I plotted it like this. And you guys can see this is the first tier of the trading range and second tier of the trading range. So you can not only measure the lags like this moves, you can also try to find a measured trading range, which later on came into play. As the market is working higher, we have a new high right here. We have a first entry long, pullback, second entry long. But this is a bearish looking bar, and we're still not touching the EMA with the body. So I went long on this bullish bar. I treated this as a second entry long because we triggered above a nice bullish bar. This was a bearish bar. This was a nice bullish bar. I was a little bit hesitant because prices are working in this downtrend, but remember, this is right now strong uptrend, higher highs, higher lows, prices are above the EMA. This is a very strong indication. This is a strong uptrend right now. We don't want to fade this breakout, just as I mentioned in my previous video. So second entry long with trend at the key entry point, at the EMA. This is the new low. Prices pushed higher. First entry short we triggered below this bar that failed, and a second entry short right here. This, I got stopped out on this. My runner got stopped out on this big bearish bar, and I should have re-entered on this because this is now first entry short, second entry short, because two-legged pullback is a high probability setup. Second entry is a high probability setup. This was a second entry long, and we are now looking for failures to the short side because we are in an uptrend. So in an uptrend, we're either looking for second entry longs or we're looking for second entry shorts that are going to trap a lot of people. They're going to be failures. So first entry short, second entry short. Once again, we closed above the EMA. Each time prices attempt to close below EMA, we instantly rail up higher from here. So first entry short, second entry short, and the market continue working up higher. Now, we have this trading range. Prices went and created this small little consolidation, this trading range right here. And you already overshot the measured move of a trading range. And you guys can see how it nicely came into play. A lot of sellers right now started to selling, and later on they actually managed to pull the market lower. But as I was watching this market from this point on, remember, we are still in an uptrend. Even though we are at the measured move of a trading range, that's not enough for us to start selling. If we want to start selling, we need to wait for breakout this trend line, new high, and then reversal pattern. But we are still now in an uptrend. And prices pushed lower below EMA, first entry long, pullback, second entry long. If you had your stop here, because it was very tempting to enter above this trade right here, above this bar, you still would have survived here. This is why you don't want to mess with your stops. One of trader told me that he put his stop, he tightened the stop too much and he got stopped out. You always want to put your stop few one ticks or more ticks below the signal bar. I recommend one tick, even though in the ES sometimes prices will go just one tick further and then continue working up higher, but that's another story. So I tried to re-enter this trade right here on this bar, and I chickened out of this trade. I put my limit order in, as you guys will see. I was waiting to get filled, and I chickened out. And as soon as I chickened out, prices railed up higher and made quick, easy scalp. Prices then turned lower, and I was looking at this. I was treating this as a first entry, as a first leg, pullback, second leg. This is a clear first leg, pullback, second leg, as a two-legged move to the key entry point. Plus, there's some support starting to form here. Now remember, we are still only looking for the high probability setups at the key entry point. I'm not interested in going long here, somewhere around here, or going short here trying to pick tops. No, I'm in an uptrend. I'm only focusing on the EMA, second entries at the EMA or second entries at this trend line. That's where the magic happens. I don't care about what happens in the no man's land. Once again, I was watching this market, this bar, fairly big bar, and I was prepared to put my limit order in. I put my limit order in actually, and I was holding it there for quite some time. But once again, I chickened out of this trade again. So I broke my rule twice right here. I chickened out of both trades because I was scared that it may not work and it continued working without me. So I got punished. Instead of me having 3-1 trades, I was 1-1. I was break even for the day. And this just goes to show you that trading is really, really mental. Because somebody asked me, why am I not trading 50 contracts or 100 contracts when I'm having such a good win percentage? Because that's not the problem. Learning to read the chart, almost anybody can do it after a few years of experience and religious chart studying. But the mental side of trading, that's really what keeping a lot of traders, from succeeding. And I should have just put my limit order in and get filled and not really think about this, because this is a two-legged move to the trend line. Support is holding. And once I missed these two trades, because of my fear, I closed the shop and market continued working lower. And right now we are continuing working lower and lower. There may be a potential trend line, something like this. But yeah, that was it for today. Not really eventful and very slow and very choppy. But just remember, this is very important, because this breakout is okay to fade, and this breakout, no, because the sellers really should have dragged the market lower to this support, and a lot of people starting buying. They pushed above the EMA and market continued working higher. So you have to switch the gears. And as we had the break of this trend line, your first instinct would be to look for prices to make a new high. but you have to respect what the price action is telling you. And right now we are pushing below EMA and we're continuing working lower. This is a fairly steep move and you don't want to be going long way down here below EMA. So you have to switch the gears once again and take this downtrend into consideration. As the prices are working higher in this correction, there is no way to enter this trade safely according to our rules, because this is the new low and that this is just a first entry. A lot of stims right here, a lot of wick rejection, and prices are in this correction. So we have to wait to break, at least attempt to make a new high, but there was a no attempt and prices just sold off big time. So this is definitely a confirmed downtrend. Once again, we found the support at the bottom of this channel. First entry short, second entry short, two-legged move, second entry short, high probability setup. You can make a case for going short here. I will mark it. It is fairly aggressive, but the EMA is holding, trend line is holding, two key entry points running congruently. This is good. But what is the safer entry and more, there's a bigger chance of succeeding. You have a break, attempt to make a new high, both key entry points strongly rejecting prices, lower high setup, and a nice bearish reversal bar. So this was the safest entry throughout this entire downtrend, lower high, and prices are reversing from now. So I'm going to play the live video today and hopefully you guys will enjoy it. And remember guys, follow your strategy and I'm going to see you guys in the next one. Take care everybody.
It's not a game, it's a rich thing. It's not a game, it's a rich thing.